Just like your physical health, your financial health depends on the decisions you make every day. And while healthy habits such as eating better, getting enough sleep, and exercising keep you fit, certain money habits can keep you financially comfortable, ahead of the curve, and help you build wealth. So, what are you doing every day that can help you grow your bank account? Here are some very practical reminders and tips that you should definitely start prioritizing if you aren't currently. Number one, start paying attention. You can't grow your bank accounts if you aren't actively paying attention to your finances. So start tracking your spending and checking your financial accounts often. My wife and I go on financial dates bi-weekly where we sit down together, crack open our bank accounts and our financial tracker, and talk about where we are and where we're headed. This keeps us in the know and paying attention to our finances. We also review our investment accounts as well, but that happens a little less frequently. Number two, educate yourself on finances. Learning what you don't know can make a significant difference in what you're able to accomplish financially. If you're serious about building financial health and wealth, then you need to educate yourself. After all, you can't make the best financial decisions for yourself if you don't know your options and how each decision will impact your life and money down the road. So, read financial books, do your own research, and dive deep into the pros and cons of your choices. Number three, spend less than you make. This is personal finance 101. And something that will always be true is that you will never get ahead financially if you always have more money going out than coming in. So consider downsizing and cutting unnecessary expenses where you can. It's also a great idea to focus on growing your income as well, which brings me to number four, keep looking for new earning opportunities. As much as controlling spending is an essential habit to growing your bank account, earning more money is just as important. And if you can find a way to build multiple income streams and even passive income streams where the money you earn is not directly tied to how many hours you work, then you can really supercharge your bank account's growth. So turn your hobby into a side hustle and turn your side hustle into a business. The great thing about having multiple streams of income is that you're never reliant on just one single source of income, aka your job. Because if something happens and you don't get your paycheck, you'll still be good. Now, combine the increase of income from multiple income streams with the discipline of spending less than you make. Whew. Talk about having extra money to save, build wealth, and enjoy as well. Number five, grow the money you already have saved. In addition to looking for ways to earn more and spend less, financially savvy people also look for ways to grow the money they already have saved. This can be as simple as finding a high yield savings account where you can earn more than you would from a lower interest savings account. Or if you're feeling a bit risky, you can put some of your money into the stock market and allow it to grow exponentially there as well. Number six, prioritize paying off debts. Interest and debt can hold you back financially. It's nearly impossible to get ahead, save more, and create a financially secure future when you're always paying off yesterday's purchases. So, regardless of how much debt you have or whatever your debt payoff plan is, I want to encourage you to one, pay more than the minimum, and two, stick with it. Because if you don't quit it, you'll get it. And trust me, being debt free does something to you. You start to move through life with a different energy, and it feels amazing. Number seven, pay yourself first. When you hear people say pay yourself first, what does that actually mean? It means you should take your savings out of your paycheck as soon as it hits your checking account to make sure you save something before you pay bills and other expenses. The best way to do this is to set up an automatic transfer and forget about it. See, the key to saving successfully is to save first, save a lot, and to save often. Number eight, maintain an emergency fund. Regardless of how savvy you are or aren't yet financially, building and maintaining an emergency fund is a must. It can help you avoid debt and give you a reserve to pull from in the case of an emergency. Now, how much do you need and where do you put it? Well, if you don't have anything saved, start by saving $1,000. This will serve as your starter emergency fund, but it will also help you prove to yourself that you're able to save money for a rainy day. Beyond that, it's a good idea to have several months' worth of your expenses saved up. A good rule of thumb is 3 to 6 months of your monthly expenses. Now, the best place to put this money would be in a high yield savings account or a money market account. You want this money stashed separately from your general savings account so you can clearly see how much you have and don't end up spending it accidentally, but you still want it to be easily accessible when you need it. This is why you don't want to put it into an investment account. This is not an investment. This money is meant to sit there and be readily available in case of an emergency. Number nine, budget for extra expenses. Now, in addition to budgeting for basic living expenses and bills, you should also budget for other purchases you're in the habit of making or plan to make in the future. An example of how my wife and I do this is on our monthly budget, we have a line item for things like travel, gifts, health and medical, insurance, investing, car maintenance, and every month we budget a set amount towards each of these categories. But rather than spending that money, it is automatically transferred from our checking account to the corresponding savings bucket we have for each. Well, with the exception of investing, because that is automatically transferred to our investment accounts. But every month, these savings buckets are growing automatically. And then when it's time to pay car insurance every 6 months, a medical bill that insurance doesn't cover fully, or car maintenance, then we already have the money saved and set aside to cover those payments. Number 10, do it yourself. Convenience is attractive, but it can also be expensive. Now, some services are worth paying for, and it's up to you to decide which ones are worth it to you. But it's important to know that you can save yourself potentially thousands by getting in the habit of tackling many projects yourself and not paying for the convenience that many services offer. But again, this is completely subjective, and you have to decide what works for you. Number 11, get that employer match. If your job offers a 401k with an employer match, then at the very least, you should be investing up until you get that match. Maybe it's 3%, maybe it's 6%, but either way, it's free money that's going into your investment account that's helping you save and build wealth for your future. Number 12, set financial goals. Personally, I believe that goals only become goals after they're written down. Before that, they're just wishes and hopes. So, my encouragement to you is to review your finances, look at what needs to change, look at what you want to change and how you'd like your finances to look, and then write down your goals. After that, spend some time identifying the specific steps required to achieve those goals. Number 13, learn from financial setbacks. So far, we've talked about things you should be doing and prioritizing to help you grow your bank account. But what about getting back on track after things go wrong? You see, no one is perfect, and we're all bound to make a mistake or two at some point. The key, however, is practicing the habit of facing setbacks head on, identifying those missteps, and then learning from them so we can prevent similar behaviors and habits from happening in the future. Number 14, fix bad habits. Bad financial habits can potentially do more damage than good habits can fix. So, regardless of what your financial weaknesses are, the first step is to be honest with yourself. The second step is to learn and implement new habits. And the last step is to not let yourself sabotage your efforts to build wealth. Number 15, get and stay insured. When talking about saving money and growing your bank account, insurance isn't the first thing that comes to mind for the majority. But insurance is an important protection that can help you save money when life happens. So please make sure you're properly insured and current on all policies so your coverage will never lapse when you and your family need it most. If you found this conversation helpful and valuable, comment below and let me know. I'd love to continue this conversation with you. Keep growing, keep learning, and always stay true to you. I see you in the next one. Peace.